We'll run you through the markets in West Africa with a focus on Nigeria, of course. Coming up on this segment, we will be speaking to Tayo Oyegunle. He's an analyst, equity research at CSL Stockbrokers on Closing Bell today. And then we also have Philip Oduoza, the managing director of UBA, talking us through we reached out to him at the annual general meeting that held in Abuja today, and some interesting points about the company's growth plans. Of course, you can always email us at closingbell@abn360.com. But let's move on to the markets in Nigeria. The NSE All Share Index today closed at 0.14% at 39,554 points. During the session, it did test 40,000 like we did see yesterday as well, but of course it came back a little bit. It's been really driven by the moves we're seeing in Dangote Cement. That stock is up well over 60% year to date. Let's now cross to the Nigerian Stock Exchange, where Tayo Oyegunle, an analyst with CSL Stockbrokers, is standing by to talk to us about the market's performance. Thank you so much, Tayo, for joining us. And like I did mention, we did see 40,000 today. The market up 40% for the year, in fact 41% today. And like I mentioned, we tested 40,000, but we came back off that a little bit. Your thoughts about the drivers of the market right now, because it's really a consumer goods and cement story these days.
Yeah. Hi, Wale. Good afternoon. Thanks for having me here. 40,000 threshold, again, is a good one for the market. Excitement, especially in the consumer goods sector, and then heavyweight Dangote Cement to 72 basis points up. The trend generally has been very great, so far. We have seen great interest in the consumer sector, and then on that sector, which really drove great gains today, was the downstream petroleum marketing sector. It increased about 150 basis points, on this front. But I think we owe the performance today largely to Dangote Cement, and the expectations are that the trend continues, the positive trend continues.
All right.
I think basically that was Dangote Cement doing a lot of work.
I know you're an analyst that focuses on consumer stocks, and I imagine that if you look at the companies that you follow these days, pretty much all of them are sales. I imagine that perhaps the only exception may be UAC. And let's talk about UAC right now. Of course, they recently announced a deal with Imperial of South Africa that, of course, invested into their logistic business. Now, I want to talk about the prospects for that company, because we are seeing a lot of interesting things happening to UAC. Of course, they did do the deal with Tiger Brands as well for their foods business. What are your expectations for this stock?
I think I want to go back a little to 2011 when the company announced that it was restructuring. Now, market perception was that USN is now becoming a more focused business, trying to spin off those areas that were loss-making and that were weighing on the business, and trying to focus, on its growth segments. That's the food and beverage and its agro-allied business. So basically, what the way investors are thinking and seeing this company now is, seeing a more focused business. It has come out, to tell the market that it's repositioning, into the growth segments. We also have seen, the recent deal and where it acquired 51% in livestock feeds. I think that's a good one for it. And we think that this complements its investment in Grant Cereals Limited, that's in the agro-allied segment of the market.
Right, so a bit of backward integration with respect to that deal you just mentioned.
Yeah.
But given the challenging environment that Nigeria poses for many of these manufacturing companies, one wonders to what extent UAC can keep this growth momentum up. What are your thoughts on that? Because I do recall speaking to the CEO earlier, and he mentioned that there are some cost pressures that the company is experiencing right now.
Yeah, that's correct. But one interesting thing is that USN is trying to balance this out with improvement in internal efficiencies. For example, given Tiger Brands investments in the company about 2 years ago, we've seen the margins improvement. We've seen improvements in the supply chain process. So these are good things the company is doing. There are cost pressures, but on the other hand, the company is making efforts, from external investments to try to make sure that efficiency is improved from within. And that's a good one for it.
Okay, so let's talk a bit about the others consumer stocks that you may be following, the likes of Nestle, Nigeria, Unilever, Cadbury, PZ. Anyhow you swing it, anyhow you analyze these companies, you really have to rate them as sell, given the extremely high PEs that many of them are trading at these days. But a lot of people say that the sentiment for the consumer stocks is still very positive. To what extent do you think these shares can hold up at the current levels?
Yeah, there are two things. You're talking of fundamental value now, and I think the major driver of the interest we have seen in the consumer names is that the African story is opening out. Now, for us, CSL, the figures we have talked to in this year are either guys who have never invested in this market or are just opening up to the African story. Now, the growth, the story of reforms in place is churning out into the global space, and I think a lot of investors are happy to tap into this opportunity. So you see people who have heard of this growth story and what the potentials could be, and people who are trying to tap into this story. And I think this is just the right time to tap into that.
Do you think that these companies deserve the premiums they are trading at, though?
Basically, there's an argument that the market, is always right, But from valuation perspective, I think many of them valuation is stretched for a lot of them, current price.